There's a guy you probably know. Maybe it's your cousin. Maybe it's your coworker. Maybe it's the guy in your group chat who won't stop sending Bitcoin charts at 2 in the morning. A few years ago, he bought Bitcoin. Then, he watched it climb. And eventually, Bitcoin hit $126,000 in October 2025. And he didn't sell. Because Bitcoin only goes up. Because he's built different. Because he's done his research. And by research, I mean YouTube thumbnails and a guy on X named Crypto King. Today, Bitcoin is sitting around $60,000, down more than 50% from its peak. So today, we're answering the question nobody wants to ask. Why is Bitcoin crashing? And more importantly, why does this crash feel different from all the others? Chapter 1. The man who said he would never sell. For years, one man became the face of Bitcoin, Michael Saylor. Since 2020, his company's strategy has done one thing over and over again: buy Bitcoin. By June 2026, the company owned more than 843,000 Bitcoin. Saylor went on podcasts, TV interviews, conferences. His message was always the same: Bitcoin is the future. Bitcoin is the best asset ever created. And most importantly, I'm not selling. Then something happened. On June 1st, Strategy revealed that it had sold Bitcoin. Not much, just 32 Bitcoin, out of more than 843,000. Financially, almost meaningless. But markets don't run on math. Markets run on psychology. The moment investors heard that the guy who spent years saying never sell had sold anything at all, people started asking questions. If he's selling, what does he know that we don't? And suddenly, confidence started cracking. Not because 32 Bitcoin mattered, because trust mattered. Chapter 2. Wall Street stopped buying. Now let's talk about the second problem. Back in 2024, something huge happened. Bitcoin finally got access to traditional finance through ETFs. Suddenly, investors didn't need crypto wallets, didn't need private keys, didn't need to memorize a 24-word recovery phrase that looked like a grocery list. They could buy Bitcoin the same way they buy stocks. Click, buy, done. BlackRock's Bitcoin ETF became one of the fastest financial products in history to reach $10 billion in assets. Bitcoin went from $40,000 to $126,000. Everyone looked smart. And then, starting May 14th, 2026, the money started leaving. Not a trickle, a flood. Over the next 13 consecutive trading days, Bitcoin ETFs recorded outflows every single session. BlackRock's IBIT alone lost $3.3 billion. Total outflows across all Bitcoin ETFs hit $4.4 billion in under 3 weeks. $4.4 billion gone. When those funds were buying Bitcoin every day, they created a safety net under the price, a constant source of demand. When that demand disappeared, the floor disappeared too, and Bitcoin suddenly had a lot more room to fall. Chapter 3. Bitcoin versus the hottest thing on earth. Here's the uncomfortable truth. Money didn't disappear. It moved somewhere else, and that somewhere else was AI. Think about it. If you're managing billions of dollars, where are you putting your money in 2026? A volatile asset that's down more than 50%? Or the biggest technology boom in decades? AI is attracting hundreds of billions of dollars. In 2026, the 4 largest technology companies on the planet, Microsoft, Amazon, Google, and Meta, have projected combined capital expenditure above $650 billion. Every major tech company is pouring money into it. And investors are following, because investors chase growth. That's what they do. Right now, Bitcoin isn't just competing with gold, or stocks, or real estate. It's competing with artificial intelligence. And at the moment, AI is winning. Chapter 4. The Domino Machine. Now take everything we just covered: Saylor selling, ETF outflows, AI eating the institutional capital, and pour leverage on top of it. Because when prices were rising, traders were borrowing money to buy more Bitcoin. Because if Bitcoin goes up 20% and you are 5 times leveraged, you make 100%. It feels like the smartest thing you have ever done, right up until it goes the other way. When Bitcoin started falling in this cycle, over $500 million worth of leveraged long positions were liquidated. And here's what most people do not understand about liquidations. They are automatic. When your position gets wiped out, the exchange sells your Bitcoin immediately at whatever price it can get, which pushes the price lower, which triggers the next liquidation, which pushes the price lower again. At the bottom of one particularly brutal session, $1.8 billion in positions were liquidated in a single day, the largest single-day liquidation event since February 2026. So, is it over? Here is the honest answer. Nobody knows. And anyone who tells you they know exactly where Bitcoin is going from here is either lying to you or trying to sell you something. Some analysts are pointing to a potential bottom around $38,000 based on historical super bear patterns. Others think $65,000 holds as support. What is clear is that Bitcoin is now deep in a competition it did not ask for. A competition for the same pool of institutional capital that is also being chased by AI, by equities at record highs, and by a Federal Reserve that just signaled it is more likely to raise rates than cut them. That is a difficult environment for any asset,